Hey, good morning, everybody. Happy May. Welcome to another webinar. We are going to get started momentarily. We're just going to let a few of the attendees join. We'll be starting probably about 30 seconds or so. So just go grab that last bit of hot water for your tea and we'll get going. All right, we'll get started here. It's May. This is awesome. It's moving along. It's warming up. Flowers are blooming. Spring is in the air, of course, and we're rocking and rolling here. We got some good market update here today, and also Allie's going to discuss how to handle your first meeting with a big customer. And we talk big customers here. We're talking, for some it's 2-3 million annual kilowatt hours, others it's 10 million, but we look at it here, that 3 million mark is usually above that's big, and we like to get involved in those. But anyways, we'll get started here right away. Again, my name is Scott Ebeling. I'm Director of Pricing and Strategic Solutions, and with me is Coldewey, our Senior Pricing Analyst. And today we're going to talk about Box a little bit, market update, and then how to handle your first meeting with a big customer. First of all, Allie's going to start out talking a little bit about Box.
Thank you, Scott. Good morning, everybody. Happy May. For those of you who don't work with Box already, who may be not as familiar with Box as brokers who have been with us for some years, Box is a master energy broker. We are licensed in all deregulated states, helping brokers, independent brokers, and agents to bring their customers more solutions in more markets from more suppliers. Here we've got our territory map. So you'll see in green, we have natural gas only options available. In the blue, we've got natural gas and electricity available. And then we have our darker states where we have a little stripe through it that are limited availability. For the most part, those states are states where you have to be a large commercial or industrial natural gas customer to be able to participate. But if you're a big enough user, then chances are that there are some options available to you. So if you have customers in these areas, and or if you're not licensed in these areas, definitely let us know. We're happy to explore opportunities in any of these states that are lit up here. And if you don't know, that's okay too. Grab a bill copy from the customer and feel free to run it by us at the pricing desk or your account manager. As I mentioned, we excel at bringing our customers and our brokers more relationships. So the other reason, one of the reasons you would partner with Box is if you see a name on this slide of our great partners here where you would like to have pricing from that supplier, maybe you want to add them into your mix, but again, if you're not licensed or for whatever reason, if you don't have a contact over there, we're happy to put our supplier relationships to work for you. Like I said, we're licensed in every deregulated market, and we partner with all of our big brands here. You'll see NG, Direct Energy, Energy Harbor, and Dynegy, our Vistra brands, Constellation, Champion Energy Services, Shell Energy, all fantastic energy suppliers with deep roots and big backbones. So definitely be able to provide aggressive pricing. And if anybody, like I said, if anybody on this list is a target for you, if you have customers asking to see pricing from these suppliers, it's a great reason to get in touch with us here at Box.
All right, well, thank you, Allie. Yeah, so we'll go into market update. You'll be hearing from Allie here in a few minutes when she discusses how to have your first meet, what to do in your first meeting with a big customer. So let's go to market update here. First, we're just going to talk about the prices, and you see here we're still we dropped a little bit, and you'll see the changes in prices here. Gas is relatively flat, but the power prices, they dropped. And that's really just because really the low LMPs are kind of starting to show havoc on, or starting to show the show up here and starting to cause pressure on the pricing. And be honest with you, we've been feeling these have been a little overrun here, especially in 25, 26, as far as the price of power to convert the gas. So they're starting to come off now. And you see here, like, yeah, mid 40s here, low to mid 40s in ERCOT. And again, just want to remind everybody, these are wholesale prices. These are not, as a factor in the shape, the risk scatters, the, on-off peak differentials. These are around the clock, flat power prices. And not necessarily how it's going to be reflected in your energy only price, or definitely not your bundled all in price. So, but it's a good gauge of seeing where the market movement's at, because this is what really is the thing that can fluctuate and move the pricing on a daily, monthly basis, even on a fixed all in. So with that, next slide here, I just want to show the power price index, because really I'm calling this the 2023 crash of index prices, because you can see here, and this really just moves a lot with gas. The gray line is natural gas. This is spot for natural gas. The right axis has the prices over there on that side. The left axis, the price of the power. We look at PJM and ERCOT just because they're kind of the main hubs in the east, and also down towards Texas. And you can see these are just have been clearing under 30, near 30 or under 30 bucks. Definitely in ERCOT, it's been under 20. I mean, we've had days here in single digits. I've been seeing negative off-peak prices in NIHub. So we're kind of back to where we were back in 2020 and early 21 with the index prices. And again, of course, because the gas price is down that low as well, and kind of moves with that. But this, can continue as if gas prices continues at these levels, but of course it can move up when gas price moves up. But there is a crash here in index prices, and it's following through in the power prices. And so natural gas storage, we have bounced off a little bit. We were there about midwinter. We were kind of brushing up against the 52-week highs or maximums, and now we're kind of hovering below that a little bit. And this is kind of where we expect to kind of ramble around this range here, kind of slightly below to these levels with the normal weather for, if we have normal weather this summer, we expect to be here through October around these storage levels. But just want to add in here as well, if Freeport was online, Freeport is online now, so let me clarify that. But if Freeport was not offline and was online from June until mid-March, this is where storage would be. We'd be like 1550 right now, which would be between the average, almost exactly between the average 5-year average and a 5-year minimum. So it'd be a totally different storage picture right now, and we'd probably have a little different levels in gas prices, or significant difference in gas prices. Where does production peak here? I don't know. I mean, we've kind of surpassed it. It's kind of been surprising analysts here. Even EIA forecast that we'd average around just over 100, and now we've definitely surpassed that. Around 101 last month. We thought this was kind of going to start stabilizing around the 100 level, 99.5 to 100 level. It has not. And, we don't think this is going to continue on this trajectory to 104, 105 kind of range, but it could get to 102, 103. It's a little bit of an unknown. And, generally there hasn't been investments been lost, but there hasn't been a cut necessarily in production. Even though some of these fields are losing money to spot prices, they do have hedges, but at the same time, they're not just going to pull this, because you look at the curve, we do get to $3 gas pretty quickly, upper $3 for the next winter. And, just to pull wells and bring back people and hire people again, it's not worth it. They'll lose a little bit of money for a few months if they need to. But, here's where we are. We're at this higher production levels. And it's been, really compared to last year at this time, we are running a solid, 6 BCFs higher than a year ago. I put this chart together. I just want to show kind of, we get a lot of questions on, everybody's talking about the LNG exports increasing. That's the green bar here, and it's on the right axis is the green bar, and overlay it with the natural gas price curve, the forward price curve. So this is the prices from next month all the way out till December 26th of where the gas prices are, and that's the blue line. So you can see the blue lines going up along with the exports. So this is priced in. A lot of people think, oh my God, hey, they think they got an edge on this, and they think like, oh, hey, I'm gonna buy now because LNG exports look like they're gonna be going higher. Well, they've priced this in right now, and that doesn't necessarily mean that it's appropriately priced. We think there's definitely what it does is it starts favoring the risk of this over the and there's a couple factors with that, and we'll get into that in a few minutes. But there are factors there's a potential more risk starting, say, mid 2024, even winter 2024, if we have a really cold winter of the prices going higher. But prices are generally reflective of the current fundamentals here, and for this, and this kind of chart shows that as well. And also shows again here, just look concentrated in the blue line, it does really reflect how like, hey, yeah, here's gas prices today, but by December, or really by November, they're back above $3, which is kind of the new break-even level of producing gas in most regions. That level is about $2.50 pre-COVID. Now it's up to about $3. Yes, inflation hits everything, but it kind of shows like, hey, they're in the money everywhere between that period and beyond. And so with that, investment will continue to go into the space. But it depends. It's kind of it's just an unknown how much investment will go in there. One of the bullish things that's going on right now is natural gas generation is higher year over year. We talked about this last month. This is continuing. This is around a 4 BCF difference. So it's taking a chunk out of that 6 BCF of higher supply. We got a 4 BCF of higher demand, really natural gas generation higher year over year. This is a chart here just showing the past 6 weeks, but really speaking over the past year, it's about 4 BCF difference. And that's weather normalized 4 BCF. Finally, cheap PJM capacity costs. These are much lower than they were in 22-23. And so 24-25 auction, which was a few months ago, again is here. I mean, this is taking out, the importance necessarily of the CP notifications and PLC management for this summer, because what happens this summer will be reflected in that 24-25 capacity prices. So, I mean, if it's evaluate your program, the cost of adhering to the program, and the time spent on it for trying to hit those 5 days, and what your cost savings necessary could be. And in summary here, just term gas prices flat month over month, in prices down 1 to 3. Next prices clearing at very low levels. Below normal April temperatures have brought these natural gas storage slightly under the 5-year highs. If we factor in an LNG terminal, Freeport LNG, we'd be between 5 and 5-year minimum. Robust natural gas production is surprising many analysts. Natural gas used for power generation is up 4 BCF a day, weather normalized, compared to last year. So it's kind of counterbalancing with the natural gas production. LNG exports are flat this year, but will be rising in 24-26. Forward prices are factoring this increase in. And really what we think here on a weather normal basis, the market is oversupplied through the fall. Prices currently reflect these fundamentals, and we expect low volatility through September, but there are still a lot of unknowns, and that's what we want to get to, because that means like with there's still a lot of unknowns, it doesn't mean they're going to be completely naked and not hedged if you have stuff coming up in 24, 25, take some chunks out there, and have something hedged, because there's still a lot of unknowns. We don't know what the weather's going to be like this summer. We don't know really, relatively speaking, what political crisis is going to happen, especially with the debt ceilings and things like this. And there's a lot of just unknowns. So we highly recommend having something hedged. We expect low volatility. It doesn't necessarily mean that we expect prices to go down $2-3 a BCF or $10 a mega, $10 to $20 a megawatt hour. We are not going to have a move like that, like we've had at the beginning of the year. Again, we expect the low range of this is pretty much the lows might be in, and we might only be really 20 cents or so off the lows, and in gas, and that's $2 to $3 in power, and that's just potentially we might be off of there. When I say low volatility, it means that we don't expect huge price increases through September. So that being said, we will. Oh, and PGM costs are much cheaper. Lowering PLCs this summer has lost its importance. So again, strategies: be disciplined, set a strike price, and hedge something. These are so important. Do not get caught into a game where we've had many people who fell into that last summer and even back in November, December, and had to panic buy because their prices just went way high and they were short at the wrong time. If you have a disciplined approach, it's the best approach, and it's going to keep you out of trouble, which is the ultimate goal of pretty much every energy procurement manager. Oh, sorry, one more slide here, and this is kind of not different than market rate here, price compare rates. I just want to have a discussion on this and give a few points in this. One is these rates, the utility rates are often used as a PTC rate. So we're talking a price compare rate. We're just saying it's a utility rate for customer savings purposes, and they use it. People use these for compare what the customer savings are. These rates are approved by regulators. These rates are often based on the cost to generate power. So they fluctuate as well. And we saw that in the past year. We've seen some places that were at 10 cents, they went up to 20 cents, and now they're 12 cents, all in like a 12-month period of time. So they change every 1 to 6 months depending on utility, because again, they're based off the cost to generate power. The volatility in these rates is often as high as the index prices, just delayed a few months. So I think one thing I want to emphasize here, if anything, is if a customer's on utility rate, it's just the same thing really as being on a kind of a monthly index rate. It's really the same thing. So with that, it is kind of false to use these rates for future savings purposes. And also, really for the customer, if you're looking at your rate and it's slightly higher than, or it's even with the utility rate, and because gosh, you could take customers starting last January, and they could in some of these regions say like 10 cents, like, oh, utility rate's 10 cents, and you're showing me 10.5, like, no, I'm gonna stick with utility rate, and then bam, they could have been paying 20 cents and they could have locked it in. So it's the same way, but it also don't necessarily show savings against that, because people were showing savings against that. It's that when it was like some of these rates were 20 cents, and bam, they had a rate of 14 cents, and now that's like 1.1. The customer then come back and say, hey, now utility rate's down. No, I'm not saving money. So it's not really, because you're showing really a fixed rate versus an index rate. And a fixed rate versus an index rate, you can't really declare savings at all. And it's kind of false to do that. Just want to clarify that when we're using these rates, it's a good thing that's maybe to show the customer the PTC rate, but don't necessarily guarantee savings against it. It's not the device they compare it to. If it's up to me, I wouldn't even show the customer rate unless they really ask, and I give them the same basically slide I here I'm going to show, and we'll put this out here of what that rate really means. For best budget certainty, buying a fixed price contract is the best practice, hands down. If you want budget certainty, that's the only way to really kind of provide that for yourself. You are not going to get this in the utility rate. That is, again, just really a glorified monthly index rate. That's all I got. Sorry for the long-windedness there, and we'll now go to Allie, and she's going to tell you how to have your first meeting with a big customer. Go ahead, Allie.
Awesome. Thank you, Scott. Some really good points on that last slide. I like to tell customers it's great if you like your utility rate, but it's going to change next month. So find a rate that you like and put it, fix it for 36 months. If you can find a rate that you like. And like Scott said, even if your retail rate is on par with your utility rate, choose the one that's not going to change in the next 1 to 6 months. If you like it, that's great, but sign it so that you fix it and put it in place over the long term. Secure that budget certainty. That's really where that value is. All right, moving on, highly requested topic. We are going to go through how to prepare for your first meeting with a big customer. Whether you've been in the space for just a couple weeks or a few years, if you have a lead on a big customer, we want to be able to support you. So we're going to go through some tips here, but also keep in mind that Box is here and happy to help with customer meetings. We're happy to help, happy to help prepare in advance. We're happy to help if we want to do if the customer's preference is to do a big data dump and just have you or us sort through all of their invoices, things like that. We're here to help every step of the way, whether it's coaching or hopping on a call with the customer, all the way through articulating different product structures and some of the different options, walking them through contract negotiations. We'll go through all of those pieces in a minute, but just remember that Box is your partner and we're here to help. So top 5 tips for a successful meeting. Number 1 is to do your research and go in with some notes. In general, you want to know where this customer is located, if that location or locations is in a deregulated energy market, if it's deregulated for both power and gas, or just one, just knowing your options. So if the customer starts to ask some questions about, well, what about this? What about water? What about propane? That you're ready and you can say, well, yes, we can for electricity and natural gas, and no, we can't, and talk about deregulated versus regulated commodities and market structures. Know your customer, know the individuals that you're talking to, know their titles, know their responsibilities within the organization best you can. The better a grasp you have on who you're meeting with and on the way that that customer operates their business, whether that's operationally or at the facilities level, the better you're going to be able to help them, and the better you can design a product around something that suits their needs. Number 2 is to set an agenda and pace the conversation. This is kind of an ironic point within a webinar where we're just talking at you, but this stuff can get dense. Make sure that your customer is following you. Make sure that if you've brought material with you, that they're not distracted reading the material when you're going over a particular point, a service that you're wanting to highlight or a way that you can help them. Make sure that they're engaged in the conversation and pause every 2 to 3 sentences just to make sure they don't have any questions. You can always ask them, hey, I just went through a lot of information. Does all of that make sense? And just take temperature, make sure that they're staying with you. In this first meeting, our next point is to delay showing prices. If and when possible, Scott and I both, we go into these meetings treating it as a discovery meeting, really treating that first meeting as an interview. You want to get to know the customer and you want the customer to get to know you. We don't need to talk prices at this point because we don't know what product is best going to suit the customer's needs until we go through the discovery phase and find out how they've been managing their costs and get answers to some of the top questions that we'll have on the next slide that can give us some insight as to what strategies might be helpful for that customer. If you deliver prices too early, it's very possible that you run the risk of painting yourself right into a corner, either against another sales agent, another broker, or against the customer just going online and saying, well, I found a better price online, because you haven't walked through the process, you haven't educated them, you haven't developed your relationship, and that customer hasn't learned that you're an expert in that space. So bring your expertise and show them the plan of how you're going to help them control their costs. Don't show them one energy price and assume, or even, you can go in there. Don't show them, 20 prices. Don't assume that a fixed rate all-in contract on a standard term is going to meet the customer's needs. During the meeting, ask a lot of concise, open-ended questions. So we'll go through some of those questions on the next slide, but they're great questions to get answers to. Again, we'll get a lot of insight if we have the answers to these questions on what strategies or pricing structures could benefit the customer, on what contract terms they might appreciate, on what their timeline looks like for execution, and what type of maintenance they might need throughout the term of the contract. Be a consultant. You are here to bring solutions, not just prices. It's not necessarily about price, and we go through this, every month on our market update. The number one takeaway is to have a plan, set a strategy, be disciplined, put something in place, even if the market's high or you think the price could potentially go down a couple dollars. Hedge partially. There's a lot of different ways that you can look at this. There's a lot of different strategies for delivering the most cost-effective procurement strategy to your customer. And so remember that regardless of where you are in the conversation, the more you can learn about the customer and the more you can align yourself with them, put yourself next to them rather than across from them on the negotiating table. You're here to serve them and to help them through this process. And you may hear some questions about, well, I'm not sure what, where this bill is, or I don't know when my contract end date is, all of these types of things. A lot of this data, especially with customers who have multiple locations in, many different states, can end up everywhere. You can bring a ton of value by helping your customer to aggregate all of the information in one place, and even just giving them an overview and delivering a baseline. That's something that's incredibly valuable for a lot of customers. So again, don't go in just with pricing. Start talking about the plan, walk through what the customer needs, get some questions answered so that we have some insight into what product structure might help them and when they're looking to move. And your odds of actually closing that deal and working with that customer, helping them secure a plan with you, go up.
Yeah, Ellie, can I step in here as well? This is great stuff here, and I really want to emphasize this point because I see the mistake being made a lot, and we have around the pricing desk here. First of all, I have, multiple years experience in this industry. So does Allie. We've seen a lot of deals and seen what works and doesn't work. And we see the stuff that gets closed and doesn't get closed here. And the deals that get closed here have a significant, it's probably 3 to 4-fold increase in chances of getting done when it's done in this route of being a consultant rather than just showing prices for these larger deals. And what's so important is you got to put yourself, if you're the consultant coming in, just keep telling yourself that before you go to these meetings. I'm a consultant, I'm a consultant, I'm a consultant. And you go in there and you act like it, because your goal is to bring something of value to them that they haven't seen before. You're dealing with big customers, they get called every day by somebody. And most people will just be like, here's pricing for you. And if you provide pricing for them, they don't really need to list you anymore. They got something they need. They've got some pricing. They're going to compare it to somebody else. Cool. All right. They get pricing. They get pricing from multiple places. They get pricing themselves from suppliers. Suppliers hit them up. But you need to show them something that they're not currently receiving, something of value, something you can bring them. And my favorite, maybe I'm aging myself here, but the original Wall Street movie, one of my favorite scenes in there was when Bud Fox finally gets in. He finally gets in. Bud Fox is this broker, and he finally gets into Gordon Gekko. And he's stockbroker, young guy, searching for whales. He gets in there, and Gordon Gekko is this billionaire, powerful Wall Street guy and investor. And he gets in there and he starts pitching stocks like, hey, this, and Gordon Gekko is just like, Like, okay. And then St. Gordon Gecko's barely listening. And he's reading the birthday card. It's his birthday. And he's like, puts it in the shredder. It's surprising me, bud. You got something I don't know. Tell me something I don't know. And he's shredding up this birthday card. He shows me he's like a soulless dude. Like, but that's him. He's not there to necessarily make friends. He's not there to the customer not there to necessarily make friends. Customer's not there to hear pricing. He wants to hear something. He took the meeting from you because he wants to hear something that maybe somebody else doesn't have, and is giving them. So find that thing. And one of the ways to do that is to ask questions, and you get these things, and then you can come back later on with a plan, a strategy. And that's the goal. That's how you're going to win these customers. If you just follow a process, and it's very simple, your chances go up. Trust us. Just trust me and Allie. You'll get these done, and you'll be a lot happier for it. Go ahead, Allie. Sorry about that.
No, absolutely. Thank you. Our next slide shows questions that you should aim to answer during this first meeting, during this discovery phase. Now, the more answers and the more feedback you can get on these questions, exactly like Scott said, the better your odds of coming back to the customer with a good plan, a solid strategy. So first and foremost, collect your documents. You want LOAs. We have a great generic LOA that works for both commodities. In some areas, utilities will require their own form. So make sure you go in prepared with those forms. Ask for bills. Ask for current bills if they can get them to you. They can get them to you then, they can get them to you later, but there's a lot of information on bill copies, what they're currently paying, who their current supplier is, what products they might be on. That's all very, very helpful on those bill copies. Get a hold of their current contract if they're willing to share that. If they do have a contract in place or have had a contract in place in the past, definitely get your hands on it. It can be very helpful to review and see where maybe there were some missed opportunities in the way that they purchased in the past. The more documentation you have, the better an idea we can all get of how that customer is currently managing their energy spend, if at all. And let's look to answer those questions. How has the customer purchased energy in the past? Is this a customer who, has always worked with suppliers? Do they work with suppliers directly and they never work with brokers? And how can you show up as a broker and potentially make some good recommendations and show them the value of working through a broker or consultancy? Or have they been with the utility the whole time and they're just used to paying their bill and whatever the utility says the rate is how they've gone along with it. What is the customer's risk tolerance? If the customer has been with the utility, are they okay with their rate moving as much as utility rates have over the last 12, 18 months? Or would they prefer a fixed rate solution that can deliver some budget certainty? And so they know no matter how much or how little they use, that they'll be billed at the same rate. What would be best for them? Are they willing to take on a little bit of exposure in return for, potentially realizing some lower costs that we have during, shoulder seasons? There's all sorts of product designs that we can look at if the customer is open to taking on a little risk, but knowing how risk tolerant or risk averse they are. It's a great question to ask. What is important for them when selecting a supplier? Are they, do they want to work with somebody who, is a absolute natural gas expert in, UGI, Pennsylvania for, for gas and look, specifically at that market? Or are they wanting somebody who is national? Do they want a big brand? Do they want a supplier that is generating green electricity? Or is it okay if they just want to purchase RECs? All sorts of questions. What's important for them, and if they have dealt with suppliers before, it's always good to know if the customers maybe had a good experience or a not so good experience, just for context, and so that we can deliver better. What are the customer's goals? Does the customer want to be carbon neutral? Does the customer want to pay as little as possible every single month? Does the customer just want to be able to provide their CFO with a budget? All of those are good goals. And we can help customers with each of those with different solutions. So remember that we're not here just to provide pricing. We are here to provide solutions to the customers' problems and help them achieve their energy goals. Other things that can be helpful, if we can find answers, are: does the customer own the building? Do they have any renewable or carbon neutral? Do they want to go carbon neutral? Does the customer have any plans for future efficiency projects if they do own the building? If they don't own the building, if they're leasing, how long is their lease? And would they potentially would they potentially move at the end, or do they plan to renew? All of those are, very, very pertinent questions. Learning how the customer is using their electricity, and really how much control they have over, over their cost structure and over their options. Are they looking for something that aligns with their lease, or are they bound by, their landlord? So, all good questions. And again, the more insight that we can get, the better a solution we can deliver on the other side. Moving through, remember that, like I said, we are here not just to deliver prices, but to deliver solutions. So that encompasses strategic procurement, but some of the other things that I touched on are utility usage analytics and budget reporting. If they are struggling to put together a comprehensive budget for the next 12, 24 months, that's something that we can help them with through Utility Data Box. Contract analysis and negotiation. Contracts, as we know, are almost always written to benefit the writer, and our suppliers obviously write contracts that are going to lean to their benefit. So our job as consultants is to help our customers negotiate these agreements so that they're more fair for both parties involved, and to go to bat for the customer against these, large energy suppliers. We've successfully negotiated some very favorable contract language for larger customers who have been thrilled. So it's always worth looking at that contract language, making sure that you understand which components are included in a fixed rate and how disputes will be handled should they ever arise. How, if the customer does decide to become more energy efficient in the future and does a HVAC retrofit, how might that affect their rate? Is that something that the supplier will be flexible about, or is that something where the supplier could, look at changing their rate? How strict is that supplier? How tolerant are they? Looking at pricing optimization models and energy sustainability strategy and benchmarking, RFP management and execution. All of these things are strategic solutions that your pricing desk here at Box is happy to provide. If you have customers who are interested in orchestrating a formal RFP, if that's something that that they're wanting to get into, and that's the strategy that they would like to pursue in the past, or if their shareholders are demanding that they formalize a process, that's something that we can help them do. Sustainability strategies and benchmarking, again, with Utility Data Box, we've got visibility to an awesome level of data. We can see our dashboard right here. Thank you, Scott. We've got analytics to optimize efficiency, forecasted energy budgets, custom reports, bill auditing. Buying energy can be really complex, and with that complexity comes the possibility of customers signing contracts that don't include what they anticipated. Our goal is to ensure the customer gets the very best deal and the best contract terms possible in the marketplace, and help them identify areas for improvement via some of these platforms and solutions that we can run in tandem with our procurement process. So.
Yeah, I just want to add in here, just go back. So one thing that's contract analysis is that I think you spearheaded that about a month, 2 months ago. There was a deal, and this is an example. I just want to use an example, but it's a large size, where we saved this customer about $150,000 because we were getting multiple pricing, and one of the pricing was it was 10 mils lower, so $10 a megawatt hour lower than the other ones. We're like, well, something's wrong. I mean, when it was a large size deal, something's wrong here. And we noticed there was, some components that were, after reviewing the contract, really had to dig in because these things aren't clear. Again, they're written by the writers. The writers of them are gonna steer it their way. They're gonna try to keep it to hide stuff a little bit. I'm not saying purposely. Nobody's trying to be. I'm not accusing suppliers of being deceitful. It's just, it's different ways that they can price things. This isn't a simple. A lot of people think it's a very simple thing. They try to put everything and everything comparable, and it's not necessarily all the time. And long story short, we found out these components are missing. Da da da. Next, they're actually like 5 or 6 mils higher. In the end, it would be, and over the 4-year term of the contract, we figure it's $150,000 that we saved that customer. So these 6 things here, and also then utility data box, and I can't emphasize this enough. I mean, I would get, if I was a consultant out there, and I'm not, but if I was a consultant, I would want everybody on here because now I got them locked into something that I'm going to give them, and they're going to be, if they use this thing, and I assume they will, they should, because they're going to love it. And now they're going to want to continue doing business with you because you've provided this awesome thing that they're using. Why would they go anywhere else, right? Because if they go anywhere else, they can't use your system anymore. This is a way to lock them in. But these other things as well here, these are the things that you can bring a value to them that they don't normally get. These are the things to talk about in that first meeting, not a price. These are the things that you can provide a value that somebody else may not be bringing them. And just wanted to point that out. So we will on the questions. Thanks, Al. That was a great presentation there, and that's so helpful. The slide deck is in the webinar right now. You can find it. It's under handouts and download that. We'll also be getting this out. I know our team will be getting this out here shortly as well to all our broker partners as well here shortly. But for right now, you can download it right now. You have it right now, the PDF version of this. But any questions we have out there? No? I think I see one here. It's a good one for you, Ali. How can we access LOAs from Box?
That's a great question. Online, we have a site of our website called the Broker Resources page, and that site has a ton of helpful information. We've got slicks on how best to use MSC and some of our platform's features. We've got information on utility data box. We've got letters of authorization, both our generic forms that are box branded. We've got some things that can be dual branded. We've got letters of exclusivity, and in 40 areas and utilities where the utility requires a very specific form, we have most of those forms posted up on the Broker Resources page as well. So definitely check it out. All sorts of helpful information there on that Broker Resources page.
Excellent. Thanks, Ali. We appreciate everybody joining this call and just participating with us. If you have any questions, just let us know. We're here to serve you. We're here to help you succeed. You succeed, we succeed, but we don't succeed if you don't succeed. So we're here, our #1 focus every day as account managers, as support analysts, as pricing analysts. Our president is here to help, is your #1 focus every day is to serve you as customers. So just feel free to reach out and give us a call if you need anything. Have a great rest of the month here. We talk to you guys next month, and we'll get a date on that out here within the next couple of days.
Awesome. Thank you, everybody, for joining this morning.